Hey guys, it's Will here. I wanted to do a special video on the ARK ETFs because they're quite popular and they've taken quite a hit recently, as all the growth stocks generally have done. And there's a couple reasons, I guess, for that. One is that they've had a huge run and things are shifting to more value stocks or like reopening cyclical plays, banks and energy and travel and stuff, things like that. The other thing is interest rates have been rising. The 10-year yield has been rising, so there's fears of inflation. But when the interest rates rise, that the present value of the growth stocks goes down quite a bit, like the discounted cash flow calculations. When you use a higher interest rate, that lowers the present value of those stocks. So the question is, should you get back in, and what's the scenario? So if you've been following my videos, you kind of know how I use these charts, but I'm going to get into it and just tell you my thoughts. And I'm using TC2000. I've mentioned that in all my videos. You can help me out and help yourself out by using. It's a great program. It's the best program. I mean, there's web-based stuff, but this has all my stuff in one place and all sorts of columns that I've customized and formulas and stuff like that. If you want to get a free trial, check out the link in the description of the video below, and you can also get $25 off if you decide to purchase. One of the benefits, like with the gold plan, and I've got US real-time data, is I can see pre and post market prices. I can buy stocks, in the pre-market as well. I use TD in Canada, the TD web broker, and I can buy in the pre-market as well. So, anyway, if you look at ARK, what I'm looking for, and you could even hold these for quite some time. Like, I'm not talking about day trading or necessarily, but if you look, one of the things I want to point out is, and on my chart I have the 50-day moving average, which is blue, the 200 moving average, simple, and then I have this lighter blue line, which is 21 exponential moving average. And so, but essentially what I'm looking for is higher highs and higher lows. So I've got a little line underneath the low. So when it pulls back and it starts going up again, you've established a low. And that's like a support point. And then when you have highs and it pulls back, that's a high. And then you have another high. So I can put a little bit of I can put some horizontal lines here. I'm going to remove this box. And then I can put a line here. So you're seeing higher highs and higher lows. Now all of a sudden, when the candle breaks down and closes below the previous low, that's a bad sign right there. So this would be this black candle closing below that previous low. The other thing that's happening is it's closing below the 50. So this day it went way down here. So you can see that there's different strategies people have. So for example, like if you say, if it closes below the 21, which is a fairly close moving average, you can see here that we didn't really close below that. Here there was a slight close. If you were patient and didn't waited for the next day, you would have been fine. And then you had a close here. Again, if you decided that was quite a bit lower, if you decided to wait, you went way down here, and if you waited to the end of the day, it pushed right back up to the 50. But this is where things are starting to turn. And but then once we broke down, so you could have sold here, it comes back up again, hits off the 50 and isn't able to make it. And that establishes a new high. So this high is lower than that. So that's a bad, when you have a lower high, that's a bad sign, and then you see it kind of tank at that point. So when you're not able to break, like you can have a pullback, it's just a matter of severe it is. And when it starts to establish, going back up again, you know, you could be okay. But so there's different. So this is all kind of indicating you've broken a recent low, a previous low. You've closed below the 50, and now this. So the thing is, this 21 EMA crossed down below the 50, and we've established another low. So we have a low here, comes back up, bounces, and once you see it bounce off the 50 and go down, it's usually a bad sign, because it's not able to break through the 50. And so now we have this, we have lower highs, and now we're getting lower lows. So we're in this transitory state. We can see here we have another low. It actually bounced right off the 21. So you can see here the 21 and the 50 are right at the same point. Bounced off that as resistance, came back up. People think, oh, it's back again, baby. They start buying, but it's not even above. It's still below the 50 and the 21. And of course, a lot of times it does use that as resistance. So of course you can see it, and again here and here. So the 21 EMA was a really great line where you see we bounced and we're going down. So the other thing is we're getting very close to the 200, and the 50 is sloping down. So we had this up slope of the 200, and now it's starting to slope downwards at obviously the 21. So I'm not ready to buy. My suggestion for myself, and you know, it's up to you what you want to do. Obviously there's people that buy dips and things like that, and they're getting a lower price than when it was way up here. And if you're going to hold it for a long time, you know, that might end up being a good decision. But from my perspective, I'm going to wait. So I like to buy, like in this scenario, you can see this huge long uptrend. Stocks above the 21 and above the 50. The 50 is above the 200. And because if you see here, even with a few closes below the 50, if you're patient, or if you're looking at the 21, you can see, I mentioned this in a previous video that I did, the 21 stayed above the 50 this whole time until right there. So that's a huge, that's like a year of riding this up. So you can definitely position trade, swing trade for a long period of time, you know, even if you're using the charts. So what I want to see is new higher highs established. We have this slight higher low here, and we might get support at the 50. We've got pretty close to, at the 200, we got pretty close to the 200 here. So I want to see this turning around and starting to establish higher lows and higher highs. We don't really have a higher high. You can see that this is technically, like right here, another higher low. So that's when you can start to, once you start to see higher highs, you'll get a wedge effect, and then you want to see it kind of break up. So I'd want to see this turn around. You probably get support at the 200, or you know, if you get support at the 200, you'd want to see the 21A turning around, 21 EMA, and crossing back up over the 50, and with those establishing higher lows and highs as well. So if we look back at the crash in March, we had these higher highs, and then we started to establish a higher low. So once we bounced off this at the 21 and the 50, that, you know, you could have shorted that easily, because you could see how it didn't get back up above. So if we had a line here at this previous resistance, once we closed down here, you might have gotten out right there because you broke this recent low, recent support level. And then you've got the 21 crossing down. So some people are going to get in and buy all these low spots, and it works out great in their case. Obviously, that was a huge drop. But you can see that we establish a higher low here. And this is what some people wait for, who are trends. They want to see, and then ideally it breaks once you have, like, you don't really have a two sets of higher highs. You just have this one here. So once you break up above that, now you have a higher high. But because you're so close to the 50, I'd want to see So an earlier entry is here compared to once the 21. If you're waiting for the 21 to cross the 50, then you're getting in there. And then you can just ride that up, and you can draw your you can have like your lows and just ride that all the way up. So that's what I'm trying to show you, is the transition from the downtrend to the up. So you're going to be a bit late in terms of hitting the actual bottom, but you know, you can ride trends quite a long time that way. So hopefully that helps. You know, you're close to the 200. There could be support here, but we're in this transition. We've got lower highs, and we've just started a little bit of a higher low and potential support at the 200 before we start going back up again. And you know, we have similar scenarios with ARK G. So K is the generic one that covers a lot of different areas. But if you get into finance and ARK Genomics, you know, there's similar situations. So we are getting down closer to 200. ARK Web, ARK Industrial, all kind of similar. So I would be waiting to get into that. So just be a little bit patient, wait for that turnaround, so you can see how easy it is once the 21's above the 50, how you can ride those up, and you have higher highs and higher lows. So hopefully that helps. We'll talk to you guys later. Don't forget, you can get the TC2000 in the description below for free, and a free trial and $25 off. I've got the US real-time data and gold plan that allows me to see pre-market. So I can say here, include post or pre-market, and I'll see the actual prices. And especially right now it's closed, but during the pre or post market, I'll actually see a candle and pricing before the market or after it closes. Talk to you guys later.